Good morning, everyone, and welcome to today's featured webinar, What Does the New Stimulus Bill Mean for Businesses? I know people are going to be funneling in here for a few minutes here, so we're going to do some intros, and then we will get started with our presenters. Okay, my name is Julie Hinker, and I am the Program Coordinator for the SDCEO Women's Business Center. We used to be the only one in the state of South Dakota, but we have been fortunate enough to get approval to start a second site in Sioux Falls. So we're really excited about this new launch. So there will be a site in Spearfish, South Dakota, and a site in Sioux Falls. So lots of details that are still getting rolled out, but we did want to make everyone aware of this new opportunity that SDC CEO has gotten. We will be looking for a director, so we'd really appreciate it if you'd keep it on your radar. If you think of anybody that might fit into that position, any recommendations, we'd really appreciate it. The job description isn't out yet, but it will be out in the next couple of weeks. So just keep that on your radar in your networks. We'd really appreciate that. And just note that both sites will be offering the same services, from free business advising to leadership conferences, webinars, trainings, workshops like the ones you are on now. And lots more. So just keep that in mind. We're just going to have 2 locations so we can better serve the state of South Dakota. So this webinar will be recorded, and we'll send this recording to everyone following the presentation. So if you're on live now, we will send you the recording as well as the PowerPoint slides. So that's a great opportunity for you to kind of look through the PowerPoint slides later on. And then I will also include all of our panelists' contact information as well. So if you have additional questions, you can feel free to reach out to them personally. I would like to remind everyone to please use that Q&A in that chat. That's kind of how we're going to facilitate today's Q&A at the end. So if you have questions at all, please place them into the chat or the Q&A. I'll be monitoring that. And then at the end of the presentation, we will have an opportunity to kind of do a live Q&A with our panelists. And then I would also really appreciate if everyone could change their name to your first and last name, specifically for tracking purposes, as well as when I go to send our email later today, those of you that were actually on live get those PowerPoint slides versus those that were not. So it's kind of a perk for being on live. So if you could change your name, and if you have questions on how to do that, you can message me privately. But usually if you're on a desktop, there's 3 dots up by your mute button on your picture, and you can rename yourself. So if you could just change that for me, that would be really awesome. Really appreciate it. And then before we get started, I'm just going to give everyone a quick rundown of today's schedule. We're going to hear from 2 experts from the SBA District Office in Sioux Falls. They're going to give us a quick overview of our EIDL and PPP updates. And then we're going to move right into our presentation from our experts from KTLLP, which we're really excited to have on with us today. So let's get started. Please welcome our SBA experts. We have Pam Selberg and Michelle Ahrens on with us. Good morning, ladies. And I will turn it over to Michelle and let her give some updates.
Thank you, Jillian. Thank you for hosting these. These are a great opportunity for us to get the word out. So I just have a couple quick things. I want to say that the Paycheck Protection Program is now open to all lenders. Last week it was kind of segmented in different groups, but now it is open to all lenders, participating lenders. So if you're interested, check with your lender today. And also, SBA is preparing for the Shuttered Venue Operations Grant. And this was part of the new legislation, and it's for performing arts organizations, museums, zoos, aquariums, movie theaters, operations, things like that. Now, we don't know exactly when it will be out. It will take a little while, maybe 2 weeks or so. So just keep that. There was some publicity, there was some presentations about it. So if you go to our website, which is www.sba.gov, and if you look under the COVID banner at the top, it will talk about the Shuttered Venue Operations Grant. And also, if you go there, you will see a little blurb about targeted EIDL advance. And again, this was written into the new bill, but we are still waiting for the criteria. and it mentions it is targeted, so we're not sure who it is targeted to. So you might want to keep that in the back of your mind also. So that's kind of what we have as updates. We're working really hard on the PPP grants. And this is for first-time users, excuse me, and second draw users. So check with your lender. So thank you, Julie.
Thanks, Michelle, and thanks, Pam, for being on. Michelle and Pam are actually going to stick on with us throughout the whole webinar, which is really great. And thank you for doing that. So we can actually take any and all EIDL and PPP questions at the end, as well as any additional questions you have from our presenters. So I would like to mention, for those of you that are new, you might not know that we actually offer this webinar every Tuesday at 10 o'clock Mountain Time. So Cato Thorstensen is actually a feature this week. We don't always feature someone, but we always have our SBA experts on every Tuesday at 10 a.m. So if you're new to this webinar, I always send out the next week's link to register. So keep that in mind. You can register right from the email that I'll send out. And then you can attend these updates that we do weekly. And then one additional event to watch out for is our COVID-19 legal update for employers. And that's on February 18th from 10 a.m. to 12 p.m. Mountain Time with Jennifer Frank at the Lynn Jackson Law Firm in Rapid City. And she's actually done this event before. So she's actually just kind of building on her last presentation and giving some updates for employers. So it's a very good one to be on. And these are all free. Just keep that in mind. These are all free webinars. Okay, that is all I have for housekeeping business. Let's welcome our experts from Cato Thorstensen. We would like to welcome Nina Braun. She's a CPA and CFE at the Rapid City location, and Jess Weaver, who's a CPA at the Spearfish location. And I'm going to turn it over to them, but I would first like to just personally thank them and thank them on behalf of SDCEO for joining us. We really appreciate your time and your presentation that you're going to give to us today. So thank you. Without further ado, the stage is all yours.
Thanks, Julie. Appreciate it. I'm going to go ahead and share my screen here. This is a great resource, and I think the SBA is doing business owners a major benefit providing these on a weekly basis. I know a number of clients that attend these, and we're very thankful to be able to be invited in to be part of one of these weekly meetings. We're going to cover a variety of things in the presentation, and we wanted to allow plenty of time for Q&As. There's a lot of complex law changes. There's complex programs, and we didn't want to make assumptions that anyone that's sitting in on this class isn't familiar with some of the more familiar ones versus some of the maybe more unknown programs. So I'm going to cover a few things, and I'm going to hand it off to one of my partners, Nina, and she's going to cover some others. So please, if you do have questions, don't hesitate to pose them. Again, this can get fairly complex. So we're going to go ahead and dive into some of the key takeaways. And some of the, obviously the most popular one has been the PPP loan update, allowing for a second round of PPP. Those that got money for the first round, tax planning was very complicated at the end of the year. We were trying to figure out if people were going to or were not going to have major tax bills associated with their PPP funds. And so our December was pretty fun. And so this was a substantial benefit to every business owner. And I think some business owners, until I told them what they were going to owe in taxes with what they received in the first round of PPP, they didn't understand how big of a deal it was to get this loan forgiveness. If they don't qualify for anything else, this one piece of making all the expenses paid through the PPP loans deductible was a monstrous benefit, and that in itself is going to substantially help all business owners. Also, the applications being simplified for those under 150,000 for the first round. We've encouraged people that were under that threshold to, if you want to get them done, we can get them done. But we knew there was going to be guidance coming out on that. And so simplified loan forgivenesses for those under $150,000. PPP round 2. I know that the SBA is giving these updates every week, but I just wanted to briefly cover a few of those things. Less than 300 employees or 500 in the food and accommodation industry with the NAICS codes 72. And what those codes actually entail, all the different types of businesses would be your hotels, your casino hotels, your bed and breakfast, RV parks and recreational camps fall into that code 72, boarding houses, mobile food trucks, caterers, bars, restaurants, cafeterias, all fall into that. And the reason that that's a big time benefit for those is you get a 3.5 multiple instead of a 2.5 multiple for those types of businesses. So just wanting to make sure that those individuals are aware of their increased opportunity if they meet the other tests. The decline in gross receipts during any quarter of 25% compared to the same quarter in 2019. That's going to knock out a lot of businesses. Fortunately, our state has done a much better job than some other states as far as businesses being able to still perform services and provide goods to clients compared to some others. But there are still a lot of companies inside of South Dakota and the surrounding area that will need to receive PPP round 2 loans. So that's a big test. And if you qualify in any one quarter, you qualify for the program as a whole. Loans are capped at $2 million. And a question that I've gotten quite a bit is, what is gross receipts? Seems like clients get a little bit confused in knowing what gross receipts entails. It is not gross sales. Some people correlate those two together, but it does include sales, less your returns and allowances, but it also includes your interest, rents, royalties, fees, but doesn't include the first draw PPP money. So when you're looking at what your gross receipts are, if you're a cash basis taxpayer, you're not looking at what your total billings were. You're actually looking at cash that was received in-house hitting your bank account. If you're accrual basis, it's slightly different, but most people are cash basis, so it's important to be able to look at that and make sure you meet the 25% decrease test. Second, borrowers, Michelle stated that everything's open as of today. Large lenders started today. Smaller lenders were available, or supposed to be available last week. Second draw borrowers use 2483 SD, which stands for second draw. So things are fully up and going. And I think we expect every banker, things should move a lot smoother this round than last round. Kind of felt like last round, sometimes it was 4 different programs in one, because as more guidance was being rolled out, people that had applied realized, oh, I should have maybe included X or Y. Or I feel like this is going to be much more consistent and smooth for all businesses that are applying for it. Those that didn't apply first round and now want to, whether they were unaware of it, they can come back. There were certain entities that were not allowed to apply first round. And so we're getting some traction on the types of businesses that didn't actually even get any PPP money the first time around before it ended. So some of those 501c6s like economic development, tourism, chamber of commerce, as long as they aren't using certain money for lobbying purposes, they would qualify. And a lot like what the first round was, businesses, sole proprietors, independent contractors. Another big and important piece that I'm getting a lot of phone calls on are the Schedule F farmers and ranchers. And I do have an example I'll share, but gross income instead of net income. So farmers and ranchers, the Schedule F is a little bit complex in how it gets reported. And so even though a farmer or rancher would have had profit, they maybe would have been reported on the 4797 and not necessarily the Schedule F. And so now that we're taking the gross receipts, gross income of the Schedule F and not necessarily the net income, and if a farmer has received PPP money and they haven't completed their forgiveness, they can go back and have that recalculated. I'll go through an example of that. Other provisions are borrowers who return part of their original loan, they can reapply for the difference, or borrowers whose loan amounts have been impacted by some of this guidance that has come out, knowing now some of the additional language in guidance that we have. So in the farmer rancher example I have here, rancher had 150,000 in gross receipts, line 9 in 2019, applied for first round, but only showed net income of 20,000. So it would have been substantially limited in what they would have benefited from the PPP. It would have been driven off of the 20,000. So they could amend that first round PPP to get the additional funds to the tune of the max, which is based off of 100,000 in total. If you have receipts above and beyond that, that isn't going to be helping inside of your PPP application. In the second example, that same rancher had 115,000 in gross receipts on line 9. This is, going to be a more common scenario. Had a 25% decrease in one specific quarter compared to 2019. Farmers and ranchers are a little bit unique, and depending on when they sell cattle or hay sales or a variety of things, and so that can get a little bit complicated based on the timing. But they could apply for round 2 and receive additional max benefit. I'm seeing a lot of farmers and ranchers that just didn't apply, period, because they had a loss on their Schedule F, and so now they're coming to their bankers. So I think we're going to see a lot of these smaller PPP loans to the tune of $20,000. But that's really going to help every one of the farmers and ranchers that are pursuing it. So I think that's a great benefit, and you don't have the income test if you're dealing with round 1 compared to if you're coming back for a second round of PPP. Eligible costs to use on the PPP, they're all the same as round 1, including those, but there was some additional ones added. Supplier costs that would be deemed essential supplier costs, your FF&E worker protection expenses, software, cloud computing. As accountants, we recognize how much people have had to put resources into tracking whether the HR for some of the credits or accounting for some of the different programs. And so, that piece makes a lot of sense. And it applies to both the original PPP and new. So if someone didn't consume all of their PPP, haven't applied for their PPP first round, they can look at some of these expenses and see if maybe they wouldn't have had forgiveness on the full PPP. Now maybe they would meet that. And with that, I'm going to pass this over to Nina. This is a really exciting topic, and one that we didn't talk about a lot last year. And she will chime in on why, but I think we'll have plenty of questions on this, and one definitely worth spending some time on. So I'm going to pass it off to Nina, and then if anyone has questions, we look forward to answering them here at the end.
Thanks, Jess. Did you give me control? I requested control of the screen.
I think so.
Okay, perfect. Sorry, the control freak accountant person in me needs to be able to touch and move the screens and the slides myself. So, all right, I'm going to take you to a wholly different place from the PPP side. Why these employee retention credits are now incredibly important. When this first came out, you were not allowed to have a PPP loan and take an employee retention credit. Now that has changed. If you have a PPP loan, you can still qualify for an employee retention credit. So this is important to note for borrowers. It may mean going back in time and amending back tax returns, but this could be a really good deal for companies. We've seen some really humongous credits. So what is it? It's a refundable payroll tax credit. So what that means is it goes on your Form 941s. You must have payroll to claim it. It's refundable. So let's say we only owe 10 grand in payroll taxes, but our credit is $30,000. That means you get a check for the difference. It is a refundable payroll tax credit. So the important thing to note with the PPP restriction changes, we can't double dip wages. So one of the more complicated things, if you're eligible to go back in time on this credit, is to look and see, did I already use those wages on my PPP loan? Or am I using them for something else? Work opportunity credits, R&D credits, there are other places where wages might be used and we can't double dip those. Waiting on a little bit of guidance there from the SBA, but should be able to figure some of that out soon. There's some benefits on it. If you have those situations, we can talk about them. Sorry. Oop. Moved too fast. Sorry about that. It took control and then really hit it hard. So what I'm going to do is there's two different periods of this credit, right? One, we're thinking back in time to 2020, because while there's some similarities, there's going to be some significant differences. So we're going to put on our 2020 hat now here first, and then we're going to move on to our 2021 hat. Okay. Now in 2020, to qualify for this credit, we have to have one of two things: a reduction in gross receipts by 50%. And that again goes by how you file your tax return. If you were a cash basis taxpayer, this is a cash basis test. If you were an accrual basis taxpayer, this is an accrual basis test. And then you either had to have a full or partial shutdown. So let me give you some examples on this. This credit starts on March 12th, 2020. That is the first day that wages are eligible for this credit. If I'm here in glorious Rapid City, South Dakota, the mayor shut down bars, restaurants, some limited entertainment facilities from March 27th through April 8th, 2020. So now that hits 2 quarters, right? We have the quarter that ends March 31st and the next quarter. If you are subject to even partial shutdown, so the mayor shut my business, but I'm a restaurant, I can still do takeout. You still qualify for this. Let's say I'm a social club, like a golf club or a country club, and I can still run my golf operations. People can play tennis. However, I can't run my dining fully. It's all takeout or it's limited. I'm running hot dogs out of the golf shack, right? Those are takeout and on the road type things. You will still qualify for this. So if you are a fast food business and the drive-through is the only thing open, the lobby shut down, you are partially shut down. Okay, and if you qualify for a day in that quarter on a shutdown, you qualify for the whole quarter. Now you will qualify until such time that your sales go back to 80% in a quarter. So if in fourth quarter we go back up to 80, we earn 80% of what we had in 2019, then we're done with taking the credit. So this is 2020. So in 2020, if you had less than 100 employees, everyone on your payroll while you were shut down, in the quarter you were shut down, qualifies for this credit. If you had over 100 but less than 500, only those people we paid to not show up to work count. So it's an important distinction on that. And in 2020, the credit's 50% of wages for the whole year. So I'll give you a quick example. So this is Joe's Diner. The mayor of Rapid City shuts him down, but he could do takeout. He figured out a menu that people like, they heat and serve, people still come to his business. But he then qualifies for Q1 and Q2 to take this credit. But he didn't take it because he had a PPP loan that same year, which made him ineligible until this recent legislation was signed in December of 2020. So he didn't take it. So now Joe is going back to his CPA and saying, hey, I was shut down. I need to go look at this employer retention credit and I need to amend my 941s. And again, you get a 3-year window to amend these. So there's no rush. You won't lose it if you don't get on it right away. But this is an important thing to note. So what did the new the COVID Relief Act do? It extended this tax credit. This was set to expire at the end of this year, the end of 2020. It extended it to July 1 and expanded it. So now, instead of having to have a 50% gross receipts reduction in the quarter, I only need to have a 20% gross receipts reduction in the quarter. So in that quarter, and that's a comparison in so I'm taking Q1 2021 and comparing that to the same quarter in 2019. So you're looking at first quarter 2021, first quarter 2022, and the comparable quarters in 2019, right? Which makes sense. It wouldn't be 2020 because in 2020 went off the rails. People weren't getting, as the gross receipts were down, nobody would be earning this credit, right? So we're going back to 2019. It's logical when you think it through. And the credit expanded. If you remember in my last slide, it was limited to $10,000 per year per employee. Now it goes up to $10,000, or the qualifying wages are $10,000 per quarter, and you get 70% of those wages on a quarter. So let me put that into example terms. So this company had gross receipts of 100,000 in Q1 of 19. The same quarter in 2021 was down 25%. So we met the revenue test. So they are eligible to take that credit in 2021. Let's say they had 3 employees that quarter. It's a small company, they don't need very many people. They have 3 employees that quarter, and they pay each employee $10,000 in Q1. Then they're eligible for a $7,000 credit per employee, or $21,000 credit. So these, if you qualify for these can be humongous credits. And they could qualify again in the second quarter, it'd be the same deal. And this could be the difference between one party happening or not happening for this company. It could be, if you're a contractor in South Dakota, it could be the difference between getting paid on a big DOT job in January 2019 and not having any winter work in 2021. So these are the kind of things that we're looking out for. Let's see if I get this to turn.
Nina, one question on that.
Yeah.
The gross receipts test isn't important if you have a government mandate, partial shutdown, correct?
Right. If you have a partial shutdown, that is an OR test. So if we were to shut down now, your gross receipts don't matter. You could make more money and still qualify for this if you were shut down. Again, the recognition there is that you had to do something significantly different. And the likelihood that you made more money if they closed your lobby or closed your restaurant, it's probably not likely. But there are all kinds of, I'm thinking in this in a local to South Dakota terms, but in a lot of states, we shut down everything. And so there were some significant differences there, and people were unable to work. And so you're looking at this. But yes, good point, Jess. That's an OR test.
And then how long do they have to submit that amendment or request for money?
We got 3 years to amend our 941s, just like regular tax returns.
So no rush on that.
No rush. And again, on these, it's really hard because to claim it for that quarter. Let's say you qualify for Q1 of 2021. It's real hard to get all the calculations and everything done with the quarterly filing. So if you have to, you file the return, close the books, then we adjust it later. It's important stuff. So I'm going to take you to a couple other quick things that came up out of this law when we had the COVID relief bill. One of the other important things for businesses is the Family First Coronavirus Act was extended. This is the one that there was refundable sick leave. This extension is an optional extension, it is not mandatory. But what this act originally did was there was paid family leave and paid sick leave. So an employee could get up to 80 hours of paid sick leave, and if an employer paid them, then you could get that back on your 941s as well. So this was an important deal. As COVID has continued, this has been key in places to keep paying that. The other piece of that is if an employee cannot work because they're taking care of children or family, you can get some additional leave time on that. But they didn't extend the maximum. So if an employee has already taken 80 hours or 10 days in 2020, we don't get any additional time in 2021. And there were a couple softwares that were reporting this wrong. If you think you have that situation, call your accountant. I'm going to take you a couple other quick points out of this law. So a few other things came out of this law that are important for individuals around here. One of the things that a lot of contractors and specialty subcontractors get a 179 Cap D deduction. This deduction was made permanent. It was one that we'd wait and they'd extend it, maybe not extend it. It get extended after year end. This is now made permanent and inflation adjusted. The work opportunity tax credit was extended through 2025. This is another one that kind of would extend every year, every 2 years. This is a great one if you're hiring veterans, felons. The labor force around here, for those of you in Western South Dakota, is surprisingly tight. So you may have to hire folks that you wouldn't have normally hired. If we hire them on day one and haul them down to job services, there's a nice credit for hiring those folks. Another one for anyone who might be joining from a rural place is there's a rural renewal credit as part of this. And if you hire folks in certain counties in South Dakota, like Hayton County, Jones County, Perkins County, there's about 20 rural counties in South Dakota. They just need to be between the ages of 18 and 40. And if you hire that person, you can get a credit for them. That's a no-brainer deal if your business has a location in those places or an employee located there. If the employee lives there and they're working for you remotely, there may be opportunity for this. We should look at it. A couple other things extended around here. Indian Employment Empowerment Zone are important to some businesses in this area. We live on or near reservations that qualify for this. In 2021, there's been a lot of buzz about this. It does not go back to 2020. You have 100% meals deduction for restaurant meals, for takeout or in-service dining. Those are 100% deductible on your tax return. Those used to be a 50% deduction. And as Michelle mentioned at the start here, the EIDL funding is back open and there is more EIDL funding available. So the targeted groups include counties that are in poverty, certain cities and counties in poverty zones. Rapid City is in one of those locations. I know that. So if you did not get an EIDL grant before and you have employees, you may be entitled to get that even with the PPP funds. That's an important one. And then I'm gonna have Jess touch on the shuttered venue operators.
Yeah, Michelle alluded to that right at the beginning, and it is somewhat of a small window, but it's very important for these businesses to make sure that they don't proceed forward with a PPP round 2 if the calculations have been done and they think they would benefit more from the shuttered venue operator grants. The SBA does have a great layout of the timing of that, how to calculate what the benefit would be. Some grants, it's hard to calculate what the grant would be. And so you're kind of rolling the dice, where this is very clear how you would determine what the total grant amount would be. You cannot qualify for it if you have received PPP after December 27th of 2020. So that would allude to starting here in January. It's equal to 45% of your 2019 gross revenue, or a 6x multiple of your average 2019 gross revenue if you opened in 2019. So you look at, if you opened in April of 2019, you're not going to take the full year at 45%. You're going to take every month that you were open and average those months out and take that times 6, and that would be your total. So it is very, it could serve a substantial benefit. The most common would be the movie theater operators. There is a preferred tiered system to determine who gets priority of funds. Those that have more significant revenue losses get them sooner than those that don't. But to be aware of those that are live venue operators, theatrical producers, movie theaters, museums, zoos, aquariums, those things are going to be important. Those businesses should look and make sure that, to not just pull a trigger on PPP round 2, because it may not make sense and it may cost them significant. So just wanted to bring that up as a point of reference for people to be aware of. And I think with that, Nina, the last slide, I think just has some of our info. You have control. I don't think I have control of that.
Sorry about that. There you go.
So with that, we wanted to open up for questions. And I'm going to go ahead and stop sharing because but if there's something we need to go back to, we're certainly willing to do that.
Awesome. Thanks, Jess. And thank you, Nina. I'm just going to roll right through these questions. And of course, to anyone that's live right now, please just put those into the chat. You can put them into the Q&A too. I'll ask them live. And then we'll just kind of do kind of a round table, and whoever wants to take it can just kind of jump in and answer. So I'll just put the question out and then we can all kind of take turns answering. So here's our first question. If a business wasn't in business until February 2020, before the 15th, can they compare any quarter with any other quarter, or do they have to compare a quarter with the first quarter?
Do you want to take that or you want me to?
Yeah, so it's pretty clear February 15th, 2020 is a deadline date. You know, if you opened up your business there after that, you're not going to and should not plan on qualifying for a PPP round. They put that in there, and it looks like it's a pretty hard and fast number. And so if you were open prior to that, then there's some guidance on being able to utilize different quarters, because you obviously wouldn't have maybe all of 2019 quarters to use. But if you opened after February of 2020 or February 15th of 2020, then you wouldn't qualify. Am I answering that question, or are they asking? Let's see, before the 15th. So maybe they're asking if they opened, say, February 1st. Is that how they're in that scenario? You would take that first quarter and compare it to quarter 2, 3, and 4 and of 2020, and you would have to have that 25% decrease between quarter 1 compared to quarter 2, 3, or 4 to qualify for the test. So I kind of answered both ways. If it's after the 15th, no dice, and if it's before that, then you have to use your other quarters in 2020.
Awesome, thank you. Next question. Can a business apply for round 2 of PPP if they have yet completed father forgiveness for PPP 1? Yes, they do not have to have their forgiveness application forgiven. They don't even have to have it sent. You know, one really important piece is that, you know, when it was looked at, did you use all of your first round funds for the qualified expenses? And initially we took that as, did you use them during the covered period? But it's been clarified that as long as, because I have some, you know, use an example of oil and gas or a construction that you know, everything really dipped down. They didn't have the ability to use up the payroll, meet the full forgiveness during the covered period, but they have since used up the rest following, and they're just going to keep it as a loan, which is really common in the oil and gas because of a lot of the uncertainties. They would still qualify for a second round. It's just as long as you used it for the qualified expenses. And so that's a very important piece to be aware of. Okay, awesome. Thank you. Looks like we have another question in the Q&A. This one's regarding farmers. It says, how do you treat sales on depreciable capital assets? Do you include those sales also? So on a Schedule F, when you sell items that have been depreciated, they do not get reported on the Schedule F. They get reported on the Form 4797 in various parts 1, 2, or 3. And so that would not be on the line related to the line 9 of the Schedule F form. It would be excluded thereof. And I am not aware that we're adding the equipment assets to that because it's actually not on the Schedule F. It's on a completely different form. So. Okay. I'm going to move over to the chat for just a second here. Here is the next question. If the covered period for PPP forgiveness started 4/12 of 2020 and the local government service modification occurred on 03 of 23, would a restaurant qualify for credits in the first quarter?
Yes. So you would start your calculation. The law starts that on March 12th, 2020. And that's an easy date for me to remember. If anyone has school-age children, March 13th was the last day the school was in session and everything went off the rails. So March 12th, 2020, you can start calculating for that quarter. You can calculate wages through the end of that quarter and those qualify. And then even in the quarter when you get the PPP loan, you are eligible to calculate your wage. If you meet the criteria and you're closed, you can calculate those wages. You just can't use the same wages on the PPP as you do on the employer retention credit. And there's been some pretty favorable rulings. We're waiting on guidance. A lot of times the PPP loans, we threw just a huge number. We threw all the wages in there. We didn't just limit them to the very bare minimum. And what the what the SBA has been saying is what we think is going to happen, and Michelle can maybe speak better to this, is that a lot of those wages, if you have excess that you just threw on that PPP application, those will not affect your employee retention credit. You can back that off. So yes, you'd qualify on Q1.
Okay, awesome. Michelle, do you have anything to add on that?
No, Nina hit it right on the nose. And you know, on some of these things too, there's different clarifications that are coming out all the time. So, but your accountants have the best answers for some of the, especially the earned credits and things like that. So just keep in contact with them.
Yeah, for sure. And also, you know, this weekly webinar that we're doing with the SBA every Tuesday would be a great opportunity for you to ask questions too. I know our lovely Nina and Jess won't be on every time, but, you know, Michelle and Pam have, you know, the answers too. And so we can kind of help answer as much as we can at that Tuesday 10 a.m. webinar. So I would just encourage you to join us and ask your questions there. Okay, back to Q&A. Let's see. I did not have any active employees on February 15th. They were working in January and March, but not in February. Can I apply for round 2 PPP?
The test is based on when your business was in operations, not necessarily if you had employees functioning on the 15th of February. So if you had employees in January and for whatever reason you didn't run employees in February, it doesn't mean that your business was not in operations. You know, we always have to look at the facts and circumstances. But if you do meet the revenue tests for round 2, then you should qualify. And then you can choose to use your 2019, 2020, or rolling 12-month period for your payroll or for wages for the determination of what your PPP round 2 application would be. So that's been an important one to look at with clients in which one we want to utilize. And since some people actually applied early in round 1, you can't even make the assumption that if you go round 2 and you just use the same numbers as before, it'll be the same amount, because there was some guidance missing on guaranteed payments for partners that some people did miss when they initially applied for PPP round 1, and other benefits that should be considered. So making sure that if you are applying for round 2, that you're using the best payroll numbers possible.
Great advice. Okay, next question. If my employer paid FFCRA leave but did not designate a special category for the hours on the pay stub, can we still take the non-refundable credit on the 941?
Yeah, if you paid it, there's no requirement to lay it out as a special amount, as long as you treated everybody the same, right? So we adopt it. We don't adopt it for Janice, but we do for Joe, and we're all over the place. If you've been paying those amounts on paid sick leave, you can go back and fix that.
Great. All right, I'm gonna hop over to the chat here. Okay, for a 2020 employee retention credit, are only the wages paid during the government shutdown period eligible for the credit in a particular quarter, or are all wages paid in that quarter eligible?
If you have under 100 employees, all wages paid that quarter are eligible. If you have over 100 employees, there's the work test.
Okay, great. Back to Q&A here. Does PPP2 count the whole year of 2019 versus 2020 when applying?
You can pick any quarter, right, Jess?
Correct. It wouldn't be the full year test. It would be by quarter. You know, depending on what you have for the business, that usually it's based on by quarter. So it wouldn't be the whole year, and you can't pick.
Okay, can I jump in just a minute?
Yeah. Please do, Pam.
Okay, so the IFR, stated that, and I'm going to be a little bit delayed, that's why I'm not speaking, so I apologize to the audience, but the IFR stated that that a borrower that was in operation in all 4 quarters of 2019 is deemed to have experienced the required revenue reduction if it experienced a reduction in annual receipts of 25% or greater in 2020 compared to 2019, and the borrower submits a copy of its annual tax form substantiating the revenue decline. So that was in the IFR. I think it's pretty spelled out then.
Yeah.
That is, you can use your full tax return then for 2019 as long as you had a 25%. I'll be quiet now.
No, that's a good, I remember reading that. Now you say it, Pam, and I was thinking, in what scenario would someone not have a quarter that was down, but the whole year would be down? And so, you know, if from a bookkeeping standpoint, you know, being able to provide the detail, whether it's bank statements, if you have financial details, you can provide that. You know, tax returns, you know, we're not even allowed to file tax returns until February. So I'm not saying you couldn't have copies of those, but you know, chances are from this application, based on the timing, tax returns probably not your best bet if you're wanting to get this done sooner than later.
Okay.
Thank you, Pam.
Yeah, thanks, Pam, and thanks, everyone. That was kind of a roundtable answer there, so thank you. Okay, back in the Q&A, a couple more questions coming in here. Let's see. For round 2, as a sole proprietor, I received income in Q1 2019. Am I comparing income in any of the quarters in 2020? As an example, if no income was received in Q3, would that meet the criteria to apply?
It would be a quarter. You have to use the comparable quarters. So you can't use Q1 in 2019 and Q3 in 2020 because that'd be kind of manipulating. And I think most businesses, a lot of businesses, have seasonal flows of revenue, and so they really want to make sure that it's apples to apples in comparisons. So no, that would not meet the case. If Q3 of 2019 had revenue and Q4 of Q3 of 2020 did not, then that would be an appropriate application, but not using different quarters.
Great, thank you. Another question from Q&A. Please discuss the various payroll calculation methods for determining your PPP round 2 payroll amounts, since it sounds like we do not need to just use the 12 months of 2020.
So I've had a couple bankers, not from here locally, but in other states that just sent my client and said, I need your 2020 payroll numbers. That's what we got to use. And I responded and I said, no, you can use your 2019 payroll numbers. And so you should look at which one would provide benefit. Obviously, it makes sense that possibly 2019 I've historically seen higher than 2020 because most businesses were somewhat shuttered in 2020. So it would be important to look at that. And if you're using your 2019 total year numbers, then you know, from the SBA guidance, that makes what you need to provide your banker much easier. If you're using the same banker and using the same numbers, you don't have to provide those same reports again, unless, I don't know why the bank would be asking for it, but the SBA says, you know, if you're using the same banker, same numbers, you don't have to dig up those reports and provide all them back in a duplicate fashion to your banker. So you got to run the test.
Okay, thank you. I'm going to go back to the chat here. My business is owned by myself, a proprietor. It's a freight hauling business. We don't write any checks for wages and payroll. Does this qualify for any of the PPP funds?
Yes, you can use
Maybe.
your Schedule C. Yeah, right, maybe, but you can use your Schedule C. If you were in business, you're falling into PPP 2. If you wouldn't have qualified last round, it would be the regular PPP. Jess, you take it. It's your side of the presentation. Sorry.
Yeah, no, you're right, Nina. I say maybe because if your Schedule C business ran at a loss, then there's nothing for me to calculate your PPP on. So we do need to have profits in your Schedule C to benefit, which is a little bit different than your farmers and ranchers. That's been an exception for farmers and ranchers where it's based on gross receipts, but for Schedule C sole proprietorship businesses, it's based on your net income.
Okay. I don't know. I think I might have skipped this one. So I'm going to throw it out. If my business opened in November 2019, is there any way for my business to be eligible for PPP round 2?
You can still get a first-time PPP loan. If you were operational by February 15th, 2020, and you were not qualified originally for a regular PPP, the first PPP round, this next round opens up, has a set aside for new borrowers. You would fall into the new borrower section. And in that case, you just average your wages for the year and you don't have to show a loss.
Awesome. Thank you. One more from the chat here. My company had a 30% reduction in receipts in Q1 of 2020 compared to Q1 of 2019. As the pandemic did not hit until March, is there any restrictions on using this specific quarter?
No, I think that's exactly the scenario that we're looking at, is the reduction between the two. And if it's over 25% in any of the quarter comparisons between 2020 and 2019, then you would be allowed to apply for PPP 2. If you're in a scenario and you didn't get PPP 1, then you don't really care about the reduction in revenue test. You don't have to meet that. So only for PPP round 2, which in your case you would qualify, Justin.
Great. Are there any other questions for either Nina or Jess? We also have Pam and Michelle with the SBA still on too, if you have any other questions. So I'll give everyone a couple of minutes here if they think of anything last minute. Jess, do you guys have anything you want to?
I want to jump in and answer one question or come back to Ted's question on not having to use 2020 payroll. He can use 19, but you can also, I've had some clients where they ran a rolling 12-month as of today, and their January of 2021 was actually much higher than their January of 2020. And so that's the third test that you can do for payroll, is determining, all of 2019, all of 2020, or a rolling 12 months based off of today. You can't go from June to June for that test. It has to be as of this application timeframe. So just wanted to come back to Ted and give you that other option.
Thanks, Jess. Something just came through the Q&A. Can you explain what gross receipts are in an accrual accounting? So accrual basis accounting, when your revenues reach a certain threshold, you have to file and pay taxes on accrual basis. Most people don't do that because you don't want to be on the hook of paying taxes on your receivables when you haven't received the money. We want taxpayers to recognize the tax when they have the cash. That's why it's a cash basis. It doesn't mean you don't have receivables, just means from a tax basis standpoint that you file on a cash basis and not an accrual. So you'd see that on your business return, whether it's marked cash basis or accrual basis. But if you are truly an accrual basis taxpayer, your business is that, then your gross receipts would be deemed based upon when you did your billings and not necessarily when you receive your cash. So it would be based off of, you could print your accrual basis financial and it wouldn't necessarily correlate to your bank statements. They wouldn't match hand in hand. They would be different. Okay. Great. Thank you. Lots of great questions, lots of great answers. Are there any other questions that you'd like addressed right now? Anybody that's viewing? We're going to wrap things up here in a couple of minutes, but I will give you just a second to add any last minute questions if you have them. I did want to remind everyone that we will be sending out this recording to everyone later on today, along with the corresponding slides and all of our panelist contact information. So if you do want to follow up with anyone, you're more than welcome to do that. I did want to thank everyone for joining us, not only live, but to our presenters. Thank you, Nina. Thank you, Jess. And thank you to Pam and Michelle. It was great to work with all of you. And I know this was an extremely valuable presentation to everyone that was on. So again, thank you. Just a reminder, we will be back on Tuesday with Pam and Michelle show for our IDLE PPP open Q&A webinar at 10 a.m. Mountain Time. And I will send all the links in our follow-up email later today. I hope you have a great rest of your week. Thank you for joining us. And we hope to see you next Tuesday. Thank you, everyone.